Okay, that's an optional benefit, which is called disability income. Now, why is an optional benefit? Now, through Social Security, you get a statement every year telling you how much you were to become disabled, how much you were to earn if you were to retire. That is through Social Security. I believe you get a statement every year, correct? Okay. Now, if you become disabled, the government will actually wait 5 months for you in order for you to collect that disability. Now, through your job, do they offer you any type of long-term or short-term care or any type of disability income policy? Yes, they do? Okay. Now, that's important that you know that the private coverage that we do give you, we can actually sell it to you, but you won't be able to collect. So you don't need it. Why? Since 1983, the government made a new rule that passed in Congress that you can only collect up to 70% of your income if you become disabled. So that is in combination with Social Security and through your job. So if I give you this disability, you will be paying for something that you won't be able to collect, because first you have to go through Social Security, and first you have to go through your job, then through Social Security, and whatever is remaining goes through us. So just to give you an idea, if they do not offer it to you through your job, then I can add it to the policy. You can get a 2-year or a 5-year benefit. You pick whichever benefit is good for you, and you have a 90-day waiting period, which is in order for us to start paying you. The maximum amount that we are able to pay is your mortgage amount, which in this case is $1,400 a month. So remember, if someone tries to come here to try to sell you disability income policy, they're trying to make a commission from themselves and nothing for you guys, because you already covered through Social Security and through your job. Okay? Any questions so far? No? Now, the last thing is a benefit, and the $390,000 we pay upon any death. Accidental, terminal, cancer, whatever death may be, except suicide. That is within the first 2 years. If you're thinking about killing yourself, wait 2 years to do that. By law, I have to put it in writing. After 2 years, we do pay suicide. Within the first 2 years, we don't. Okay? Now, the other benefit is called terminal illness, which is called accelerate death benefit. If you get terminally ill and you are going to die in less than 12 months, we can cut you the check of 100% of the death benefit, which means in this case it's $390,000 while you're still alive. Okay, now you don't have to take the full amount, because they probably only need $40,000, and then the difference we'll pay to your family once you actually pass away. Now, we base our decision on your doctor's records, so you don't have to go to any of our doctors. Okay. Now, the other benefit is called waiver of premium, which is if you become disabled, the policy is free for you until you go back to work. So again, this waiver premium is for people who are 55 years or younger, okay, which both of you qualify. But if you become disabled, the policy, you don't have to pay it. We will pay the policy for you. For how long? It doesn't matter, as long as you're disabled. Okay? And the last benefit is unemployment waiver. Especially nowadays, if you get fired or laid off, the policy is free for you for 90 days. Now, why 90 days? Because it will take you around 90 days to find a new job, if you're lucky. But the only reason, this is for people who are 60 years of age or younger, and for people that are working for somebody. Because if you're self-employed, you cannot fire yourself. So if you get fired or laid off, you don't have to pay the policy for the next 90 days. So those are the benefits included in the policy. Now, remember, this is a mortgage protection plan, and this is why this is the reason why it's a mortgage protection plan. This is your mortgage in the next 30 years. Yours and my mortgage is going to decrease in the next 30 years. Now, what happened is our mortgage protection plan protects you for the next 10 years for the same amount of protection. Meaning it doesn't matter how low your mortgage comes down to, you're still going to have $390,000 protection. After 10 years, our policy starts to decrease every year thereafter. Why? Because your mortgage is no longer $390, it will be lower. Now, at all times, you have more insurance than what you owe to the bank. So this is why we call it mortgage protection, because we're protecting a loan that is decreasing. If we were giving you a level benefit, we're just giving you a life policy. So this is why we call it mortgage protection, and also we can give you a better price than anyone else because of this factor. Okay? Now, any questions so far? Okay. Now, once the house is paid off, and what do you do with policy? Let's say 20 years from now, you pay off your mortgage and say, Hartford, what do I do? You can actually, you have two options. let's say you're 39 right now, you can keep the policy as a life insurance policy until until age 100. Okay? Now, the other option is you can cash it in. So you can get a lump sum back to you in one check, or you can get a guaranteed lifetime income, which is you select the 10-year option or the 20-year option. Which really means is that instead of getting one lump sum, you're going to get many payments for the next 10 or 20 years. The benefit of the 10 or 20 years is you select that and it's certain and live. So if, let's say you live more than 10 years, even though Hartford already paid you, we're going to continue paying you until you actually pass away. Okay. Now on the other side, let's say you only live 8 years. We're gonna pay your beneficiary the remaining 2 years because we have to give you those 10 years back. Okay. Now, did I explain myself here how this works? The only negative thing about getting your money back is once you pick one of these two, you cannot change your mind. So in this case, you can never outlive your money if you think about it, because you either get a lump sum or you get many payments on you to actually pass away. Okay. Now, an interest bonus that we do pay. We do have a half a percentage that we pay after 10 years. Now, right now you earn 5.5%. That will equal 6% after 10 years because we're going to give you that half a percentage extra. Now, that bonus kicks in after the 10 years. And here's why my clients tell me, Paul, but 10 years is such a long time. But I'll ask you, how long is your mortgage? Your mortgage is 30 years, right? You might need it for the next 10. If you keep it for the next 10, we're going to give you an additional 0.5% extra. And that's in the contract in black and white. Now, our agency has been with Hartford for the past 32 years, and Hartford has been in business since 1810. Now, before I leave today, I have to give you an idea what type of insurance this is, because part of your money buys insurance, the other part of your money goes into the cash value. So, your mortgage is $390,000. Well, what the Hartford does is, see, few agency or few insurance companies are actually going to tell you where your money is going to be allocated. We do tell you because we do full disclosure. Now, what we do is out of $100 that you pay every month, 50% of that goes into the cost of insurance. This is how much it costs Hartford to insure you at all times. The other 50%, which is the cash value, goes into the other side at 5.5% interest. So every time you send a payment, 50% protects you, the other 50% works for you because that's the money you're going to get back. Now, remember at the beginning that I told you in 5 years you can get some money out of the policy? Yeah, you can get 50% of your cash value after the first 5 years. Now, the letter says that you get all of your money back. How that happens is after 15 years, you will be able to get 100% of your cash value available. Why? Because remember, Hartford is working from 50%, so it increases to 55, 60, 65, 70, up to 100%, which is by year 15, you have 100% of your money available at all times in this policy. Okay? Now, did I explain myself here? Good. Okay, that's it. Any questions? Good.